Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Today we want to talk about a W-4. If you've ever gone to switch jobs or you started a job, the employer will hand you what's called a W-4 for you to fill out. I've got Patty here with me today. Patty, what can you tell us about the W-4?
Sure. So the W-4 is what the IRS uses. They have the employer require you to fill it out so that the IRS helps the employer calculate how much withholding you should have for your federal taxes. So it's kind of very important because if they don't withhold enough, then at the end of the year, you're going to file your taxes, you're going to owe money. Or if they over withhold and withhold too much, then at the end of the year, you're going to have to wait to file your taxes in order to get your refund for what's being over withheld.
So how do you know what to put down on the form?
Yeah, so you have different options for your filing status. So that's the first question that it asks you. What are you going to file as? Are you going to be single or married filing separate? Those are the same tax brackets. Or are you going to be head of household or married filing joint? So you're going to need to know what your filing status is going to be for the year in order to have that correct.
So let's say you do know what your filing status is and you put that down on the form. Can you then assume that your withholdings are all going to come out correct at year end whenever it comes time to do your taxes?
No, not necessarily. So there is a step 2 in the process. If you have more than one employer, let's say you have 2 part-time jobs, you're going to need to take into account both those jobs and both that income. For example, if you're single and you're doing 2 part-time jobs making about $40,000 each, and you just put single, check that box and move on, each of those employers is going to take into account that you have a standard deduction coming off of that $40,000, and each of them is going to assume that you're just going to be in about a 12% top tax bracket. But when you go to file your taxes, realistically, you have $80,000 of income. You only have one standard deduction instead of the 2 that the 2 different employers are going to assume, and your top 20,000 is going to be billed at about 22%. So that's going to be a significant difference.
Yeah. We see we see that occur a lot with married individuals, right?
Right. So that's another problem there is that when you sign off and say, yeah, I'm doing married filing joint, then that payroll is assuming that you are the only one getting income for that household. So it's assuming your spouse doesn't work, and that's what it's taking into account. So again, it's doing the standard deduction for married filing joint, and if you have any other situations like dependents or whatnot, it's assuming that that's the total income for the household. So you need to take into account your spouse's income as well, because that's going to bring you up in higher tax brackets.
Right. And I noticed there is a section about dependents on there as well.
Yep. So the dependents, you want to make sure to put down only the dependents that you can get the child tax credit for, because the IRS, that's what they're going to assume, that you're going to get that credit. So they're going to reduce the withholding to allow for that credit on your return for you to break even. But now if you're married filing joint and both of you put those dependents, if you each own, if you only have 2 dependents and you each put 2, your withholding is going to account for 4 dependents.
Right.
So you're going to owe money at the end of the year.
Yeah. So how often should you change your W-4?
Anytime there's a major life event, you get married, you're getting divorced, you have children, anything like that, you definitely want to reevaluate. And if you get another part-time job, if you get something else, some other income on the side, you definitely want to evaluate at that point.
Yeah. So that's really good information, Patty. And it's always especially during tax season, we see it a lot when we prepare a tax return. And I would say a good percentage of the time, whenever somebody owes a significant amount of tax, it's because they haven't done their W-4 correctly.
Exactly.
So we always, whenever we see that happen, we always talk to the taxpayer and explain to them what's occurring and get them to redo their W-4 to have either more or less withholdings taken. Very good information, Patty. If you have questions about the W-4 and you'd like to speak with us about that, feel free to give us a call and we'll help you out. Thanks.